Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special economic weather report from here at the Reserve Bank in Wellington, where the Reserve Bank has just released its monetary policy statement for the December quarter and left the official cash rate on hold at 2.5% as expected. The key is in the Reserve Bank's comments about the outlook. It says that internationally, financial conditions and the economic outlook have deteriorated. And the key in this monetary policy statement, the Reserve Bank has reduced its track for the 90-day bill rate over the next couple of years. Now, this isn't a formal forecast of what the Reserve Bank will do with the official cash rate, but it does indicate where it thinks it'll go. And it's reduced it by about 30 basis points over the next year to 18 months. Essentially, it's saying that the 90-day bill rate will peak at about 4% towards the early part of 2013. Given there's a margin of about 0.25% between the official cash rate and the 90-day bill rate, we can assume, therefore, the Reserve Bank is expecting the official cash rate to rise by about 120 basis points, 1.2%, over the next 18 months or so. Now, that assumes, of course, that we don't have a complete meltdown on the European financial markets. And it's interesting, the Reserve Bank has put in, for the first time in a while, an alternative scenario of where it expects the global economy to go. And in that scenario, it has left the 90-day bill rate pretty much flat for the next year to 18 months. So there is the prospect of lower interest rates for longer. Also, the Reserve Bank says that funding costs for the banks on their international borrowings have increased, and that may put some pressure on retail interest rates over the next year to 18 months. However, it says the banks are in a much stronger position than they were this time during the Lehman crisis because they have so much cash sitting around, and in part because term deposits from mums and dads in New Zealand have increased. The Reserve Bank says actually the banks can afford to use those term deposits to do its funding over the next year to 18 months rather than have to go too much to international markets, which may be frozen or in a reduced state because of the European financial crisis. So there we have it. The Reserve Bank has left the official cash rate on hold at 2.5% as expected, and it's reduced its track for future interest rates by about 30 basis points. I'm Bernard Hickey. That was the special economic weather report from here at the Reserve Bank on the Reserve Bank's December quarter monetary policy statement.